Hello class, this is the last video for Accounting 100. So we're looking at Chapter 9, Payroll, Accounting, Employer Taxes, and Reports. You'll also do this in Accounting 200 or Intro to Financial Accounting. So objective, describe and calculate employer payroll taxes. In addition to the gross pay for each employee, the employer must pay payroll taxes, FICA, SUTA, which is Federal Unemployment Tax Act, SUTA as well, FUTA and SUTA, which is state unemployment tax. These taxes are add substantially to the cost of having employees. So both the employer pay FICA taxes. Each pays an equal share. Social Security 6.2% on maximum earnings of $118,500. The amount of earnings subject to Social Security taxes obtained from the payroll register. So here's an example. Sarah earned $1,860 this period, but only $860 of her earnings are below the maximum and therefore subject to Social Security tax. This period's earnings that are subject to Social Security tax are $5,035. So you take that amount times 6.2% equals $312.17. So withheld from employee, paid by employer. So total Social Security tax to be paid to the IRS is $624.34. Medicare is 1.45% of all earnings. So total earnings $6,035 times the tax rate 1.45 equals $87.51. So the employee has money withheld, and the amount paid by employer is the same amount. It's matching. So the total Medicare tax paid to the IRS is $175.02. So paid by individuals who own and run their own business if they earn net self-employment income of $400 or more. These individuals can be viewed as both employee and employer. They do not receive salary or wages from the business, but they do have earnings in the form of business net income, or self-employment income. Self-employment tax rates are doubled the Social Security and Medicare rates. They are a contribution to the FICA program. FUTA, Federal Unemployment Tax, is levied on employers to raise funds to administer the combined federal state unemployment compensation program. The current rate is 6% applied to maximum earnings of $7,000 for each employee, but employers are allowed a credit of up to 5.4% for participation in state unemployment programs. So let's look at this, back to the register to determine the FUTA tax. So total earnings is $300, cumulative totals is $6,300, unemployment compensation is $300, Social Security is $300, so only one employee's earnings is below the $7,000 earning limit and therefore subject to the FUTA tax. So a credit of 5.4% is granted because this company participates in a state unemployment program, so 6% minus 5.4, so the rate is going to be 6% FUTA rate. So $1.80, 300 times 0.06 is $1.80. Employer SUTA tax levied on employers in most states. The purpose of this tax is to raise funds to pay unemployment benefits. Tax rates and unemployment benefits vary among the states. A common rate is 5.4% applied to maximum earnings of $7,000 for each employee. Most states have an experience rate system to encourage employers to provide regular employment to workers. If an employer has very few former employees receiving unemployment compensation, the employer qualifies for a lower state unemployment tax rate. So SUTA $16.20, and we got that by 300 times 5.4%. So objective 2, account for employer payroll tax expenses. So a journal entry is needed to record the expense and liabilities of these payroll taxes. So the $6,035, the step 1 is also going to be obtain the total earnings and taxable earnings amounts from the earnings total and taxable earnings column of the payroll register. Step 2 is compute the amount of employer Social Security tax by multiplying the Social Security taxable earnings by 6.2%. So 6.2 of 5,035 is $312.17. So step 3, we're going to compute the amount of employer Medicare tax by multiplying total earnings by 1.45%. So 1.45 times $6,035 equals $87.51. And then, of course, our 300 times 0.6% equals $1.80. And then, again, 300 times 5.4% is $16.20. Okay. Step 6, prepare the appropriate journal entry using the amounts computed in steps 2 through 4. So we're going to debit $417.68. That's the total. Our Social Security tax payable will be $312.17. Medicare tax payable $87.51. FUTA tax payable $180. SUTA tax payable $16.20. Keep in mind these are our liabilities right here, and here we're making this an expense. Okay, so we're basically putting these into a payable, and it's going to be accumulated. Okay. Payroll taxes expense debit for the Social Security, Medicare, FUTA, SUTA taxes imposed on the employer. Okay, debit when taxes are paid, credit when taxes are withheld from employees' earnings, and also for taxes imposed. So basically, we're creating a liability and putting all of that accumulated taxes, expenses, SUTA, FUTA, Medicare, things like that. And then once we pay it, then it's debited out of that account. That's basically what that's saying. So Medicare tax payable, exactly the same as Social Security tax payable. Debit when taxes are paid, credit for taxes whenever they're imposed on the employer. SUTA is exactly the same as well. Let's look at the total cost of an employee who earns $26,000 a year. So $26,000 a year is about minimum wage-ish, a little bit over. $2,400, I think, is like $6 or $7 per hour. Social Security will be $16.12, so that's 6.2% of the $26,000. Medicare is $377, $26,000 times 1.45%. SUTA is $7,000 times 5.4%, and the FUTA is 6% of $7,000. Okay, because you'll be doing this, so make sure you understand this part. So the total cost is going to be $28,409. So a lot of times they call these fringe benefits. Okay, sometimes personal leave and stuff like that is also fringe benefits, but fringe benefits as far as PTO and stuff like that are not accounted for only when it's paid. Describe employer reporting and payment responsibilities. So determine when payments of federal income tax, withholding, Social Security, and Medicare taxes are due. Accumulated tax liability. So here's some examples right here. Deposits due, pay form 941 at the end of the month. So go ahead and go through these and take a look at them and study that little graphic right there. It's also in the textbook. So look back period. The 4 quarters beginning July 1, 2 years ago, and in June 30th, 1 year ago. Large amounts of payroll taxes in the look back period require frequent future deposits. Deposits must be made using electronic funds transfer. Generally, the electronic federal tax payment system is used, an electronic funds transfer system designed for making federal tax deposits. So each deposit requires a journal entry. So this company's quarter payroll taxes exceeded $2,500, therefore the January deposit is due on the 15th of February. This payment includes both the employer-employee portions and leaves the liability accounts with zero balances. Okay, so now we're actually paying these accounts, so we're debiting it. Notice how it says debit. So all of this amount is going to be paid to the IRS, employee income tax, Social Security tax, and Medicare tax. Whenever we created this and whenever we expensed it, we credited. Remember, I was saying that then whenever you pay it, you debit it. So now we're zeroing out these payables. We've already expensed it. Okay, don't forget you expense things whenever in the month that it occurs. All right, deposit employee, federal income tax, and Social Security and Medicare taxes. So the total cash sent will be $58.88. So in the Form 941, employer's quarterly federal tax return must be filed with IRS at the end of the month following each calendar quarter, due April 30th, July 31, October 31, and January 31. Reports the following taxes for the quarter: employee federal income tax withheld, employee Social Security and Medicare taxes withheld, employer Social Security and Medicare taxes as well. So this is what it looks like. Go ahead and take a look at that one on your own. Here's page 2 as well. Month 1, month 2, all your info will be on there, and then you'll sign it as well. Calculated quarterly, which is FUTA deposits. The deposit is due by the end of the month following the close of the quarter. A deposit is required only when the accumulated liability exceeds $500. If the liability is $500 or less, the amount is added to the amount to be deposited for the next quarter. FUTA taxes are deposited using electronic funds transfer, usually EFT/PS. So here's what this looks like. FUTA is paid on the first 7,000 earnings per employee. The first quarter's deposit is usually the largest. So 508 FUTA is paid, cash is going to be credited. Don't forget, we're taking this out of the payable, debiting. Form 940, Annual Report of Federal Unemployment Tax. If all quarterly deposits have been made, must be filed with IRS by the beginning of the second week of February. Otherwise, must be filed by January 31. So here's what 940 looks like. FUTA tax, taxable wages, FUTA tax period, and FUTA tax due. So take a look at that page. And here's page 2 as well as the signature page. So take a look at that. SUTA taxes, deposits usually required on a quarterly basis. Forms required vary by state. So take a look at how it is in your particular state if you do have a small business. SUTA Tax Payable 2754, and that's debited out of the payable account, and we're paying cash on that transaction. Wage and tax statements, Form W-2, given to each employee by January 31, shows the total amount of wages paid and taxes withheld during the preceding taxable year, prepared from the employee earnings record. Multiple copies are needed for the following purposes. Copy A, employer sends to Social Security Administration. B, employee files with federal income tax return. Copy C, employer retains for his or her own records. D, employer retains for business records. Copy 1, employer sends to state, city, or local tax department. Copy 1, employee files with state, city, or local income tax returns. So these are where you take your W-2s and you give them to the H&R Block, your tax preparer, things like that, okay? So here's what one looks like. Total wages in box 1, federal income tax withheld box 2, Social Security tax withheld box 4, and Medicare tax in box 6. So transmittal of wage and tax statements, Form W-3, sent by employer with copy A of Form W-2 to the Social Security Administration, due by February 20th following the end of each taxable year, summarizes employee earnings and tax information presented on Forms W-2 for the year. So here's what this looks like. Here's a W-3 form. Employee eligibility verification. Every employee hired after November 6, 1986 must complete Form I-9 to document that each employee is authorized to work in the United States, not filed with any government agency, must be retained by employer and made available for inspection if requested by the Department of Homeland Security or the Department of Labor. So objective 4, describe and account for workers' compensation insurance. Provides insurance for employees who suffer any work-related illness or injury required by most states. The employer usually pays the entire cost. Employer, I should say. The cost depends on the number of employees, riskiness of the job, and the company's accident history. The employer usually pays the premium at the beginning of the year based on the estimated payroll for the year. The year-end adjustment is made when the actual amount of payroll is known. So Lockwood Company expects its payroll for $210,000. Its workers' compensation insurance is 2%. So 210 times, actually that's 0.2%, which will be written as 0.002, which is $420. So here's how we debit this. This goes in as an expense, and we're paying it immediately. So this is going from cash. Okay, so actual payroll for the year is $220,000. What adjustment is needed? So we're going to go the premium of $420, but estimated was $440. So the difference is going to be $20 additional premium we have to pay. Again, this is very similar to $20 working compensation insurance payable. So this one we're creating payable at this point. Okay, we haven't paid it yet. So if it was $205, now we're going to have a refund due. So 210, 420, the difference is $10, so a refund. So here's how we account for that. Insurance refund receivable is going to be debited. Workers' insurance expense, we're pulling that out, and so it's going to be credited. So we're almost reversing it. So broader view, dealing with payroll complexities. Let's do someone else. Okay, so go ahead and take a look at this, read this example, and there's some questions you can answer. But other than that, thank you for watching these videos. Make sure you get your homework in by the due date. I will open up the final exam on next Monday. I think it's December 9th at 8 a.m. So thank you. Hope these videos help.